FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. This is the Financial Survival Network. I'm Kerry Lutz, and guess what? Today is March 7th, 2018. Well, you know that we watch the energy patch here a lot, both domestically and foreign. Oh, before I get started, as always, join the conversation, join the dialogue. Email us. The email address is kl@kerrylutz.com. Getting back to what I was talking about. So energy, probably the largest business in the world, certainly the most important. So goes energy, so goes the underlying economy. Indispensable. We talk about it a lot. Are we running out of energy? Is it going to get more and more expensive to produce what the world needs? And what about solar, electric cars, and all that? Is that just going to eliminate the need for it altogether? Well, you might be surprised about the answers to that question. And you might be surprised about how you can profit about it. I've got Raghee Horner with us. The site to go to is Simpler Trading. And Raghee, welcome to the show.
Thank you so much, Kerry. Thanks for having me.
Hey, so looking at the overall energy picture here, we had tremendous instability in prices, production over the past several years. It was trading under $50 for a long period of time, $50 a barrel. Now we're looking at it, it's stayed over 60 for several months now. What are you seeing in the overall picture, the fundamentals of the energy market?
You know, when you look at the fundamentals of the energy market and then you look back on price, it's almost like they might as well be, being steered by 2 completely different forces, because just this past November, we were in the U.S. at all-time highs in terms of output. So whether that be the glut narrative, how much oil has already been extracted and sitting in barrels, whether that be the production ramp up that has been seen over the past 2 years, crude still sitting above $60, I think to a lot of people continues to be very perplexing. And I think the answer is right now, the market doesn't really care about the glut narrative. Crude's probably tracking with equities better than it ever has in years.
Yeah, I find it interesting that the last time crude traded over $60 a barrel, and we're talking average monthly close, was back in November of 2014. It stayed under that $60. It was flirting with $50 a barrel a number of months. And then really starting in July of last year, actually July to September, it started its move up. And it's basically gone up 22% from the lows there, and all you hear about is U.S. becoming world's largest oil producer in a couple of short years, but there seems to be a lot more to the story than that.
I think you add Norway, Canada, and just a number of non-OPEC countries that are ramping up production. You still have the Saudis as leaders in terms of their output. Everybody's ramping up to all-time highs. And yet, the market still seems to be pretty content on the narrative that we have the production cuts from OPEC countries. But what they forget is before those fairly minor cuts, they were at historical output. So it's like a car at red line just getting off the gas pedal. It's still flying down the highway. So I think that, again, the fact that crude is sitting where it's sitting, the fact that even unleaded gas is sitting where it's sitting, and I think a lot of folks might think of these markets as maybe futures markets, but there's fantastic ways to trade them via ETFs, so whether that's the USO contract or any of the related services. They'll notice that the disconnect it's so rampant that it's almost hard to even pay attention to the fundamentals, and they have to do what traders have done for years, and in many investors, which is just trade what you see and just kind of put those fundamentals on the shelf for now.
Yeah, so you got to pay more attention to what the market's saying than what the fundamentals are saying, because when you trade, you're trading in the marketplace, and the market often trades differently than the underlying fundamental picture, I guess, right? And right, so
I think absolutely, you said it perfectly. Oftentimes we'll disconnect, and I think if there is a connection that makes sense. Because what is it keying off of right now? If it's not keying off of the supply story, there is this whisper of increased demand. There is this whisper that while the U.S. is going to basically outproduce, or the non-OPEC countries will outproduce in about 5 years, even the OPEC producing countries, there's this kind of ghost of a demand story that seems to be building in terms of popularity, and yet there's probably not a lot to back that up. And that's a dangerous contrast. That's a dangerous narrative that I think is going to have a lot of traction and potentially hurt a lot of traders and investors, because this promise of higher demand really doesn't have any real facts for now behind it. And I think that traders would just be more well-suited to looking at crude oil tracking with the strength in equities. And if equities roll over, look for crude to go with it. And as long as the U.S. dollar is so weak, I think that will help crude oil stay propped up. So a different triangle of markets, if you will: crude, the dollar, and the U.S. equities markets.
Yeah, so they're all interconnected. And so you can't just blindly go in there. You got to know what you're doing, I guess. And how do you figure the market out? How do you make money on this market is really the question.
I think that the buy the dip mantra has worked in a lot of markets that have been heading higher. And when crude oil suffered the same fate as the equities markets on the February 2nd and 5th sell-off, and what's happened is, from a technical perspective, crude has transitioned into what's known as a distribution market trend. And distribution market trends might sound like something that maybe some listeners have heard of or not, but this is a century-old psychological phenomena that Charles Dow, as in, yes, that Dow discovered. Sure. And it just means the market's transition out of an uptrend and it's moving sideways. And one of the things that I think has been working very well is, one, patience, and waiting for crude to drop to about $58, $59 a barrel and buy it when it gets down there and leave the rest of the noise alone. And then when crude starts to climb up to about $65 to $66 a barrel, go ahead and take profit and then look to do that cycle all over again. And that's been pretty much the cycle for a good month now.
So it's been working pretty well. The problem with is the market's always out there to undermine you, right? To frustrate the majority of participants. So,
well, that's true. That's true.
Yeah. So how closely you have to watch it, though, when you're doing these trades? You got to be right on top of it, don't you?
Well, I actually usually recommend traders look at longer, even if someone's more of a longer term trader or even someone who considers themselves an investor. If they step out to a daily or weekly time frame, I'm not recommending anybody watch ticks and pips and checking the market, 10 times a day. I'm talking about maybe leaving an alert out there that could be sitting at $58 or $59 a barrel and engage a weekly uptrend or engage the daily time frames where things are much slower and you're not, in this rapid fire type environment. I think the big thing is, what's the warning in case crude's going to really roll over and get weak? And I think most people already have their pulse on the equities markets. They know where the Dow is. They know where the S&P is. And as long as those are generally being supported, I think that you're going to see crude also generally being supported. And actually, the same type of distribution market that I discussed that crude is in is exactly what the Dow and S&P are in. So they look almost like identical images of each other. So unless you're seeing weakness broadly in equities, namely the Dow and S&P, you're probably going to continue to see support not only in equities, but that also help crude track higher. And you can even step back to a weekly chart and slow it down even that much more.
Mm-hmm. I see your point, and it makes a lot of sense. And really, if we have a strong economy, then demand for energy is going to increase. Even when we have a weak economy, demand for energy is at least stable, slightly declining perhaps, but it's never, demand goes up in good years and bad years, right? I mean, it's kind of a constant.
Well, I think that one thing that traders could remember is that I think that as far as demand goes, that's been sort of the missing link of this narrative. We really have good data on the supply and really the supply glut. But demand is always speculative. I mean, we can count barrels We can have projections from the EIA and the API, but the demand is always very speculative, while the actual supply story is something much more tangible. So I don't want to necessarily underestimate demand, but I think that one way to kind of find out what those people that might have the best insight into demand are thinking is to look at some of the oil services or look at an ETF like the OIH, which has been basically bouncing along a bottom, which tells me the oil services companies, your Halliburtons and Schlumbergers of the world, aren't really on fire. They're not really heading higher. They're not ripping higher right now, but they're staying stable. You can see that in the relative chop and bouncing along the bottom on OIH. So if that OIH ETF starts rallying, that means names like Halliburton and Schlumberger are rallying. And that might be a really good clue into watching the people that are really in the know. And that could be one of the things that could kickstart the demand in crude, or at least a perception of.
Yeah, and obviously those are going to be a leading indicator, the oil services industry, for anything that's going to take place in production, et cetera, and probably a good way to judge fundamental demand. There's been a lot of contraction there. These companies have been losing money for years now. And what's the price of oil from the shale patch till these oil companies are making money and the services sector can again become profitable?
I think technology is allowing us to extract oil even in ways that were once upon a time quite expensive. I think the cost continues to drop, even for OPEC countries. I think I've seen even this idea of a good fairway for crude being between about $50 and $65 a barrel. And when you have countries like, say, Nigeria able to produce oil at, say, $20 a barrel, I don't think you're going to see, and even Saudi Arabia, it's one of the lowest output costs, even though they're a country heavily in debt and they need to see crude oil prices head higher. They also know the higher crude oil prices get, some of these shale producers are also just going to ramp up production because it just makes more fiscal sense for them to do so. So it's really a balancing act. But I think ultimately the price to produce a barrel of oil just becomes cheaper and cheaper and cheaper. And it doesn't take as much for these countries to turn a profit at $50 or $65 a barrel. So I think that's where you're going to see this nice fairway in that area.
So the trend of a cheaper production cost for oil is going to continue along its merry way, or are we going to hit a point where it reverses?
I think the bigger challenge is going to be at some point these companies are going to notice that the demand isn't there. And I think we're going to continue to see slowing demand, even though there's a lot of projections for increased demand. From where that is going to actually come when we still have so much glut out there, that's going to be, I think, a balancing act for these companies. Because at some point, crude, I do believe, has to start heading back down lower. And we just haven't yet. And I think, again, the equities markets might be keeping them propped up. So it's less about a crude oil narrative, but perhaps an inflationary narrative, a weak dollar narrative. And as long as that's what traders are using to base their decision to go long crude on, and I think there's plenty of reason to feel that we'll ignore all the reasons crude should be really at, say, $37 a barrel.
Yeah, I tend to agree with you there. And hey, if you just tuned in, you're listening to Raghee Horner over at simplertrading.com. So let's just talk for a moment about alternative fuels, alternative energy sources, electric cars, all that stuff. Electric cars are great. They're really a novelty item now. Yes, they're growing quickly, but from a very small base. A couple percent of total car sales per year are electric. And probably the overall market for auto sales is growing faster than the portion of the market that's covered by electric vehicles. What's your take on it? Is this going to have a long-term impact, short-term, medium? What are you thinking here?
The Elon Musk effect. Sure. I mean, you're seeing a lot of, even in my area, a lot of these city buses are running on natural gas. And, we know that the hybrid and electric cars, I think it's less going to be, if there's a demand story for crude, it's going to not be in the U.S. I mean, I look at countries like China and India, really, it's going to be demand from abroad. But as far as the alt fuels. I think that ultimately those are not going to be, futures tradable markets for me. Those are going to be, plays on specific companies. And it's just so speculative to me. I think for me personally, I'm going to steer clear of them right now because it is a fickle story. And I think for anyone who's got a longer term buy and hold mentality, it's just a little too dangerous right now. Now, if we talk it again in a month, or 2 or 3, it might be a different story. But for now, I've been steering clear of them.
So the death of the internal combustion engine has been greatly exaggerated, huh?
I think that we still have far too many, like heavy equipment and what, are we all going to go to battery power? I think we're still a far cry from that. But I think that if we're talking about the real still growing demand for crude, I think to think just about the U.S. is limiting. I'm really looking at China and India. And if the supply story is going to balance out with the demand, it's going to be coming from, I think, specifically those countries.
Right. So don't trade in your gasoline-powered vehicle yet. And there's still a lot of limitations on the electric cars, too. They're just getting to 300,000 on a tank, right, on a charge. So interesting times. Hey, so when we look at the market in general, when we look at how you're going to play it, you don't really need to take much consideration or take into consideration much alternative fuels. It's still a very niche-oriented area.
Yeah, I'll stick with the broader stories. I think the OIH ETF is going to be an interesting one for investors and traders to keep an eye on. XLE is a great way to look at Chevron and Exxon. I think that's going to be an interesting place to keep an eye on. So I'll look at the broader stories that I think will be more sensitive to the larger equities story in general. I think looking at those niche markets can become a little bit more, a little bit more by way of speculation. And I think traders are looking, and investors too, are looking for stories that are probably easier to understand, less inside baseball, if you know what I mean. And
sure.
I think that's the place to start. And that's where I've been. And I've been at this for 30 years. And that's even where I'm going to continue to focus on the Exxon, Chevrons, Schlumbergers, Halliburtons, those widely participated large ETFs, and looking at some of the ETFs on oil itself, like the USO, and watching those move in harmony together.
All right. Well, Raghee, it's been a pleasure having you on. Just tell us again where we find you, how we connect with you on the web.
I'm at simplertrading.com. We're a group of investors and traders looking at the markets with an active community. So you can find me at simplertrading.com. We've got options, stocks, and futures analysis there. And I think these are a lot of the narratives that have been powering our conversations and trades. So I look forward to meeting some of the listeners over there.
All right, great. Hey, and any questions, comments, you want to join the show, be part of the discussion, email us at kl@kerrylutz.com. The Twitter feed's at Kerry Lutz, and the Facebook page is Financial Survival Network. Raghee, thanks so much for taking time out for your busy day to talk with us. We'll have you on again real soon.
Thank you, Kerry. Thanks so much. Enjoyed it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.